And specifically, yesterday Nemo was talking about, hey, why don't we give these a little bit more room so that they'll run? Because we've seen a lot that are working and then we get out and then they continue to work. And I saw this and I was like, oh, this is so perfectly timed. Watching your stock hit a stop loss and then rally hurts. Watching your stock hit your stop loss, or in this case, our planned exit point, and then continue on without us hurts. But not hitting your stop loss and then watching the stock go down hurts even more.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell.
On today's episode, we're going to stop talking about how to trade and show you exactly how we do trade inside the 10-minute trading room. So be sure to stay to the end so I can show you exactly how to get that $5,488 worth of trading education for free. Let's get into it. I'm going to show you every single trade that we put on over the last couple of weeks and how we traded them. And hopefully you'll find a ton of value with this. So here's everything we've traded inside the 10-minute trading room. The How to Trade Stocks and Options podcast is now exclusively on ShareVision.com, the first dedicated streaming platform for the world of finance. And that's where you can find us every single week over at ShareVision.com. Just head to ShareVision.com to learn more and type in 10-minute stock trader in the search bar. Come like and subscribe. I can't wait to see you over there at ShareVision.com, the first dedicated streaming platform for the world of finance. Good afternoon, traders. Happy, it's Thursday, right? It is Thursday, right? I lose track of days. Yeah, Thursday. Happy July 7th. In the year of our Lord 2022, as you can see, it's a casual Thursday around here. How are you guys doing today? Thank you so much for coming to the trading room today. Yesterday I had the opportunity to go hang on Benzinga. I don't know if you guys had a chance to go and watch, but there may be some cool stuff coming down the line. I'm really excited. So, oh, hey, Chewy. Good to see you. Victor, good to see you. Happy Thursday, my friend Brian. Good afternoon, Donna. Yeah, so talking to Mitch after the stream yesterday, and they are actively looking for on-air talent to be on for the whole day, kind of like Mitch is. And I was like, you know who to call. You know who to call. So this morning I started filling out some paperwork over there, putting in my official application. And Mitch was like, I got you, bro. Let's see if we can make this happen. So I'm kind of excited. Bob, good to see you. Kevon with the fist bump. But part of the condition of working with them that I'm going to lay out just at the beginning is I would love to work with you guys, continue to work with you guys, but I don't want to turn off the company nor turn off working with my traders, because this is what I've been working for ages. And I'm super excited to have you guys and super excited to have that opportunity. Yeah, like Brian was saying, very cool opportunity. It is super cool. So we'll see how that pans out. Of course, I'll keep you guys updated. Also, I started working on the outline of our next. Hey, Tyler, good to see you, man. I started working on the outline for our next physical paperback book earlier today. Let me show you guys real quick. Share screen to there. There we go. So like I was telling you before, the objective with the webinars is to give me content that I can also come back to and use it for book content. So I was going through the webinars today and I'm like, okay, which webinars would fit well in the trading psychology genre of book? And so I went through these and I was like, okay, these are pretty good, right? And so I was trying to order them a little bit. So to give you guys a highlight, I'm looking at right now the webinar from June 3rd, May 6th, in this order. June 3rd, May 6th, April 7th. Did I actually put these in backwards? I did, yeah. February 11th and January 14th in that order. And if you guys want to see these, you have access to them forever. You just go in the trading room and go down to live training. No, that's the calendar. Where's it at? Members only live training right there. And they're all right here. So you can see the webinar that I'm talking about. Basically, I'm going to use that as the framework, and then I'm going to build it out into the book, adding moving all that stuff. Tyler, are you still testing the intraday strategy? You better believe I am. You better believe I am. And today was actually a really good day. This is the fourth position I had on today. 3 of them have been winners, including this one. The first one was a loser. I've taken my marks off each time, but yes, still testing the intraday strategy, mainly to give us all something else that we can work with. And the objective, Tyler, once we get a little bit further down the line, once I feel confident with sharing this with you guys, because I'm putting my own money at risk with this, right? I'm not just like paper trading it or back testing it and saying, oh, it's great. No, I'm actually putting my own money with this. Is I want to have some sort of Discord platform like Kavan has set up for us. Have something like that where I can have it be immediate rather than a text message, because a text message actually can delay pretty bad. But with a Discord or some other sort of instant messaging service, I can like distribute to you guys. Plus, Bob was talking yesterday. He wanted to have some sort of chat room to hang with you guys outside of trading hours, which I agree with as well. So yeah, that's definitely all coming down the line. That's all in the pipeline as we speak right now. So thanks for asking, Tyler. Perfectly planning to help you guys out as much as I possibly can. All right, so that's the latest announcements. Something cool up in Zynga working on the next book. Intraday trading strategy still being developed. Today was a really good day, but they're not always like that, which is why I'm not confident, ready to send it out to you guys yet. So let's move into today's market analysis. All right, pull this up here. Welcome to the 10-minute trading room. This is how to trade only 10 minutes a day and exactly how to take the guesswork out of trading. Now with our 10 minutes to freedom trading strategy, helped and named by our mutual friend Nima, we always start with the market. So let's go take a look at the market and see what it's telling us today. We want to see the 10-day under the 20-day with price under the 50-day if we are bearish. Let me go back to the daily chart. Actually, let me clean up some lines on here. Okay. So the 10-day is under the 20-day. Price is under the 50-day, but we are definitely seeing a potential bottom put in. I told you guys this the other day. I am cautiously bullish right now. I'm not ready to call it. And of course, we'll have a nice bear market funeral when it happens, but we're getting close. Next, MMFI is at 37%. That's really, really good. Like I was saying yesterday, the hurdle to cross the individual 50-day moving averages is getting lower and lower and lower for that hurdle, which is going to make it easier and easier and easier for them to cross. Lastly, FinClub had a green day, which is bullish. So now this is bearish, this is bearish, this is bullish. Now, when these three do not align and we already have positions on, that makes today a defensive day. We're not going to add anything today. We're just going to make sure that we control our risk. Number one objective in every single day's trading room is to control risk. So let's go look at our positions we have on and talk about them. Ernie says use WhatsApp. WhatsApp's a good idea, Ernie. Because I know, so Victor lives in Peru, and he was telling me like everybody uses WhatsApp. And you're international right now too. Oh, there it is right there. Us international nomads are used to the group chats. I may use WhatsApp. That's a really good idea. Because Discord, I've tried Discord, and Kavan knows what I'm talking about. Discord can be really big and kind of overwhelming. And the last thing I want to do is give you guys something overwhelming. I like that, Ernie. I appreciate that very much. All right. Well, let's talk about the open trades we have on. Now, we have two. We have PM and GE. We're going to go through each one. So let's go through each one. And Honduras. Very cool. We're going to go through each one and take a look at them. So first is GE. Now, GE, clearly, as you guys can see, is not trending down today. Okay. Now, remember, yesterday we set a planned exit point on the 5-day exponential, which is what we assigned initially at the beginning of the trade. Additionally, the way that we manage risk is by moving to yesterday's high. So we're actually going to pull in. We're going to find the least risk of these points here. If it's yesterday's high, a half ATR from entry, which is not that anymore, or the back tested trend line is broken. Whichever is the least amount of risk is our planned exit point. So that means we have hit an exit point on this. Now, granted, it's less than $1 from where we entered, but a trend is a series of lower lows and lower highs in this case. When you're closing above yesterday's high, right? This right here, see if I can draw it correctly. I can never do this one just right. Actually, that's pretty good right there. This right here is no longer a bearish trend. Do you guys see that? Right, so this is the high on this day. The high on this day, on the day we entered, is actually the low for today. That's not a bearish setup anymore. Now, keep in mind, we can't predict the future. We can just say, at the time of entry, which you guys know is right here, it was clearly bearish. The trend was moving down, but the trend has reversed. So now this is a very obvious exit signal. So let's go ahead. Let's exit GE. I'll tell you where I get filled. Over on the other screen in my business account. So this is GE, July 15th. 65 puts. Yes. So this would be a sell to close, Victor. Victor had an issue the other day where he wasn't getting filled, so he kept adding orders, and he ended up having sold one option more than he was intending for closing, and ended up with a negative option. And he's like, I don't know what to do here. What happened? And I'm like, don't worry about it. You're going to buy to close on that one. But in this case, we're selling to close the GE July 15th, 65 put. And I'll tell you where I get filled. I was filled at 271. Okay. Now, why do we do this today? I really would like you guys in the chat to tell me why we are closing GE today. Tell me, I want you to tell me, because this is just not me pontificating to you. This is me working with you on a daily basis. Why did we close GE today? Tell me why we closed GE today. Give you guys just a second on that. Tell me why we closed GE today. Is it because the market changed? Is it because the price changed? Is it because the trend changed? What did you see looking at GE that says, hey, this is a valid exit signal to you? Give you guys just a couple more seconds here. While we do that, let's move over to Philip Morris. And let's look at Philip Morris real quick. So this is the half ATR from entry that I've got marked in the orange right there. So our profits locked in on Philip Morris. We're following the 5-day, which is the gray line. They're not locked in just yet, so nothing to do on that part. So we're going to look on this side here. Half ATR from entry. Is the price above that? No. A close above yesterday's high. Well, yesterday's high is way up here at 98.98, so definitely not. And then lastly, is the backtested trend line broken? Nope. So there's nothing actually to do on this. We're still going to hold the half ATR planned exit point on this. 1/2 ATR planned exit point. Now listen, we're never going to find the top and we're never going to find the bottom. We're always going to let the trend go as far as it can and then reverse and then get out. So that's the way that it works. With trend following is we're trying to catch the meat in the middle, right? We're trying to catch the meat in the middle. And we don't know where that's going to stop, but we're going to let it run as far as it can. So let's go back to GE. Let's go back to GE real quick. And let me look at the chat. Brian says the trend is reversing. Precisely. Ernie says, too much red on my screen. Absolutely. Donna says it's going in the wrong direction. Yes, all of that's true. Brian says, I like your analysis, Ernie. Yeah, for sure. Now listen, when we have great trades, and they don't always happen, of course, as you guys know, when we have great trades, what you're going to see is you're going to see the entirety of your portfolio be stacked in green. And it's going to be gorgeous. And you're going to be like, oh, this is what I've been waiting for. and we're going to let them run as far as they can. But we have to take the opportunities every time because we don't know which one that's going to be. That's the thing with trading psychology is every individual trade is its own unique circumstance. This is straight out of Trading in the Zone. Each individual trade is its own unique circumstance. We don't know if this one unique circumstance is going to work at all, but we do know that we will contain our risk if it doesn't. And if it does work, we're going to let that bad boy run as far as it possibly can. Plus, as you guys know, we're putting on 1 units here. Whether that's 1 lot for you, whether that's a 10 lot, whether it's whatever for you. Starting with 1 unit based on your account size so that each one of these trades are just a scratch until we get those big home runs. Now, I can't guarantee that that's going to happen, but that's the way the system is designed to work when it does happen. So, okay, that's it. It is a defensive day, so we're not going to add any trades. We took off GE. That was easy. And we moved, no, we didn't. Our half ATR planned exit point for Philip Morris still stands. So really nothing to do today. An easy day. Take one off, leave one on. That's it. So let's go ahead. Let's move into the final thoughts for today. You're going to really like this one. All right, let me make my screen the right size. So I was going through Twitter, and one of my main goals with Twitter is to find content that I really like. That way I can share it with you guys. This is a great account to follow. Blog Julian Komar. And specifically, you know, yesterday Nemo was talking about, hey, why don't we give these a little bit more room so that they'll run? Because we've seen a lot that are working, and then we get out, and then they continue to work. And I saw this, and I was like, oh, this is so perfectly timed. Watching your stock hit a stop loss and then rally hurts. Watching your stock hit your stop loss, or in this case, our planned exit point, and then continue on without us hurts. But not hitting your stop loss and then watching the stock go down hurts even more. Meaning your best exit is your first exit. The opportunity to get out with the least amount of risk, which is what we do every single day, even though it does hurt sometimes, feels a lot better than not taking that exit signal and then watching it just go down without you. Just watching it work the other direction for who knows how long. Oh, Nima came. Yes, Nima, it is a defensive day. We went ahead and closed GE because it had hit our planned exit point already. And PM, Philip Morris, there's nothing to do on that one. So it was a really easy day. Take off GE. The trend clearly is not continuing on, and we're going to let that go. We're going to throw that trade away. You guys know that's one of my things. Throw away the trade because it's not working. Keep the trades that are working. But also, Nima, remember, watching a stock hit your stop loss and then go on without you, it hurts. But watching it hit your stop loss and then holding it past that point and watching it go continue further on without you, against you, that hurts a lot more. So, okay, pretty easy day today, guys. Thank you so much for coming. I'll keep you updated as we start working on the book. You know, before we used our teamwork to come up with the name for the strategy, which I thought was a lot of fun. And I think it would be a lot of fun to permanently name the book with you guys. So be thinking of some trading psychology names that you would like to come up with, names that could go in the book, and really looking forward to sharing that with y'all soon. This is a really tough market. Don't think you're doing anything wrong. In fact, you're doing so much better than the majority of traders out there. You really are, because so many people are just totally bombing this market. So many traders are bombing things like Netflix, right? And Netflix, even after it had this huge sell-off, has been trading sideways for a good month and a half, since April 25th. So keep in mind, you are an elite trader right now because you are watching your risk. And honestly, risk is more important than the reward. It works against you exponentially faster than your gains do. And that's why we put it paramount every single day. Thank you guys so much for coming to today's 10-minute trading room. I will catch up with you tomorrow. Same time and place for the Friday episode of the Trading Room. Talk soon. Hey, don't forget, before you head out, head to secretinvestingbook.com right now to get your free copy of the Secret Investing Book. This is how to finally get a positively unfair advantage in the stock market. And it has 13 of the secrets that Wall Street does not want you to know. And I want to send this to you for free today. Just help me by covering shipping. And the way you can do that is by going to secretinvestingbook.com. That's secretinvestingbook.com, and I'll ship this out for you right away.